Welcome everyone to our webinar on anti-money laundering regulations, key insights for in-house counsel. Before we begin, I would just like to acknowledge and pay respect to the past, present, and emerging traditional custodians and elders of this nation, in particular the Gadigal people of the Eora Nation, whose land our Sydney headquarters is situated on, and of course the various lands on which each of us are joining this webinar. My name is Joel, and I'll be hosting today's webinar. All right, a couple of quick housekeeping items before we begin. Firstly, don't worry about too diligent note-taking because you will receive a recording, the recording and the slides in your email after the webinar. Also, feel free to submit your questions in the Q&A box and we'll answer them at the end. And finally, of course, if you can please complete the feedback survey after the webinar. Those feedback surveys really help us in tailoring these webinars to make them as useful as they can be. All right, for all of our in-house counsel or management attendees, you are eligible for a free consultation with LegalVision to learn how we can help your in-house team manage your high-volume business as usual legal tasks. To make a booking, please just provide your contact details in the survey at the end of the webinar. All right, so today we'll be discussing firstly, what is AML CTF and to whom these laws apply. It will give a brief introduction on what AML CTF obligations are in Australia, and we'll go through which businesses they cover. Secondly, we'll then go through who are responsible within an organization to comply with these laws. And thirdly, we'll talk about some tips on compliance and to talk about some practical strategies to ensure compliance with AML CTF regulations. And finally, of course, we will end the webinar with a Q&A section. All right, so let's dive right in then. So you will see a webinar poll that has come up as well. Feel free to answer that webinar poll because that will help us, try to tailor this webinar. All right, so while you have some time to answer the webinar poll, here is basically an introduction of what is AML CTF. Now, AML, the acronym stands for Anti-Money Laundering, and CTF stands for Counter-Terrorism Financing. So you will hear these acronyms thrown about in this industry quite a lot. Now, the purpose of AML CTF laws is really to prevent and detect money laundering and terrorism financing. And as a secondary, but equally as an important reason, is to protect the Australian financial system's integrity. Now, the pieces of legislation that are very important to AML CTF is, of course, firstly, the AML CTF Act. And, subsidiary to that, of course, is the AML CTF Rules 2007. Now, most of you probably would already be aware by now that on the 29th of November, a new law was passed. I'm calling it the Tranche 2 bill. And that law has, given and enacted sweeping changes to the rest of the AML CTF laws. So we'll go through what those changes are in some detail and how that may or may not affect you. All right. So, yeah, just as a reminder with the webinar poll, so thanks for submitting it in. I can see there's actually almost an exactly even distribution of all the bits that you found most challenging. I think there's a slight pulling ahead with staying up to date with regulatory changes. Well, this webinar will be quite useful then, hopefully. And then next in line is actually customer due diligence and KYC processes. So yeah, no worries at all. Thanks for submitting those through. And yeah, we'll definitely go through them throughout this webinar. All right. So that brings us to the next topic we're going to go through, which is who is subject to AML CTF laws. Now, fundamentally, the rule in AML CTF is if you provide designated services that has a geographical link to Australia, AML CTF laws will apply to you. Now, what does geographical link mean? Basically, to have a geographical link to Australia, you must meet any one of the criteria on the right-hand side of the slide, which is number one, you provide services at or through a permanent establishment in Australia. Number two, you are a resident of Australia, or your company is, and you provide a designated service at or through a permanent establishment in a foreign country. Or thirdly, you are a subsidiary of a company or an Australian resident company providing services at or through a permanent establishment in a foreign country. Now, I presume if you're attending this webinar, it's because your organization already meets this geographical link requirement. So we'll move on then to talk about what is or is not a designated service. So up on the slide, I've pretty much set 5 big categories of designated services that we commonly see in Australia. Of course, there are about 50 designated services set out a table in Section 6 of the Act, but these are the 5 big categories and some examples under each of the 5. So under the leftmost category, it's really sort of financial services-esque businesses. So these include AFSL holders, life insurances, custodial services, super fund managements, and of course, securities and investment type services. Then if we've moved to the right, you have sort of different kinds of contractual arrangements. And these services and businesses include leasing businesses, hire purchase businesses, loans businesses, and finance services. Then moving again to the right, we have alternative payment systems, really, where you have payroll services, you have money orders, stored value cards, traveler's checks, things like that. And then moving again to the right, you have the 4th category, which is sort of the exchanges kind of businesses. And now for those of you who are in crypto or blockchain, this might be quite relevant for you, which is the DCEs or DEXs, digital currency exchanges. Now, this includes obviously both on-ramping and or off-ramping. And then you, of course, you have remittances, remittance arrangements or money transfers. And you, of course, have currency exchanges. Then the last category, you have what I call the bank or ADI-esque services, where you have deposit taking services, checkbooks, debit cards, EFTs, and EFT instructions, I should say, and of course, pension accounts. Now, so these are the 5 categories. The Tranche 2 bill that was passed on 29th of November was quite interesting. And I think they sort of listened to their stakeholders, whereby they have now added a concept of transfer of value specifically for the remittance services. So they've added in what we call the ordering institution, beneficiary institution, and the intermediary institution. Ordering institution is the person that accepts instructions for the transfer of value. Beneficiary is the person making the transferred value available to the payee, and the intermediary are, of course, the people in between that process. So broadly, these are the designated services. So what the Tranche 2 bill did as well is effective from the 31st of March, they have added actually more businesses that will be governed by AML CTF. And I presume a lot of the people attending today are here to hear about this. So the first category of businesses that will be brought into the fold are what we call PSPs, professional service providers. Now, on the left side of the screen, you can see basically the breakdown of what exact activity that the AML CTF Act will be regulating. But broadly speaking, these are going to cover professionals such as lawyers, accountants, trust and company service providers, financial advisors, and of course, business brokers. And these fundamentally is because each one of these professionals are likely to provide one or more of the services on the left. Now, the big ones, of course, are conveyancing services. This includes all conveyancers and a lot of law firms. Corporate advisory, trust account services, advising on capital raisings. A lot of accountants and lawyers will be caught by this. Business transactions, which includes drafting and reviewing trust deeds. And then, of course, you have services which are providing director and nominee shareholder services, which will all be governed under PSPs. All right. So apart from PSPs, we will also have other businesses being brought into the fold as of 31st of March. The first would be, aside from PSPs, would be real estate agents. And this is fundamentally when you are brokering the sale or purchase of the transfer of real estate. Dealers in precious metals and stones, these are now brought into the fold as well. And then, of course, you have on the right-hand side of the screen what they're choosing to call VASPs, um, virtual asset service providers. Now, virtual asset in this Tranche 2 bill has been defined as basically anything that is a digital representation of value and that can be used as a medium of exchange. So this basically includes will include any cryptocurrency, certain NFTs, crypto tokens, certain ones, of course, and things like that. Anything that can store some form of value and be used as an exchange. Now, not all VASPs will be covered. It's only if you're providing certain types of services. And this includes obviously exchanging or making arrangements for the exchange of virtual assets. If you are safekeeping or doing administration of virtual assets, if you are allowing or being an account provider that allows the sale of virtual assets. And of course, if you're providing specific types of financial services related to virtual assets. So these are the new businesses that will be covered by the Tranche 2 bill. All right. So those are the businesses that um, have been or will be covered by AML CTF. Next, we're going to go through who is responsible within your organization for AML CTF compliance. So here's really a breakdown of who's responsible for what. Firstly, you have the board of directors or the governing body. And fundamentally, your biggest two obligations is number one, obviously enroll or register with Austrac. And secondly, in order to do so, of course, you will need to implement and oversee your AML CTF program. These are, if anything, to take away from this webinar, these are what you must get done. Now, of course, on top of that, you need to develop your policies and procedures to give effect to your AML CTF program. You need to allow for sufficient resources within your organization to meet your compliance obligations, and of course, to appoint a AML CTF compliance officer. Which then brings us to the next big player in your organization, which is the AML CTF compliance officer. Now, fundamentally, your job is to manage the AML CTF program and regularly review it, in fact. You also need to continuously monitor and report on the AML CTF programs and the business in light of the AML CTF program. And finally, of course, to conduct training and awareness for your staff members. And finally, for your staff members is to firstly understand what your AML CTF obligations are, therefore you can comply with them. And of course, part of the compliance is to report any suspicious activity you notice within the business. All right, so there's a lot going on. So I've um, plugged this journey, really, AML CTF compliance journey from Arctic Intelligence. It's quite a useful summary. And as you can see, it's really a left to right, but then it's a circular journey because once you've hit the right, you go back to the left. Now, the reason for this is your AML CTF obligations is not a static obligation. It's really meant to be a live obligation that changes with your business from time to time. So you, of course, will start off with the left, where you would conduct AML and CTF assessment on your business. And this, of course, includes undergoing a risk assessment and risk profiling of who your customers are. What is the nature, size, and complexity of your business? What products are you providing to your customers? Where are your customers based? You're really looking at anything and everything relevant to your business to identify what the ML and TF risks are. From there, you then move to the next step, which is designing your AML CTF program. Now, with designing your program, of course, you need to really look at what is going to be most beneficial to address the specific ML and TF risks of your business. Of course, in doing so, you need to, consult and be in very close communications with your operational teams. You can't have your legal team drafting something that's just not going to work from a practical side of things. So you need to be in close contact with them to develop a fit for purpose AML CTF program. Now, once you have this AML CTF program, you then get to the middle bit of the slide, of the diagram, which is to implement and operationalize the AML CTF program. Now, this, of course, includes, registering or enrolling with Austrac firstly, but then, of course, includes all the other compliance obligations, which most of you would know by now. But the big ones are, of course, the KYC, know your customer, do all the verification of identities and things like that, find out beneficial ownerships, are they a PEP, are they from a sanctioned countries, things like that. Of course, that also includes knowing your employees and making sure that they're adequately trained, who you have to know their identities, of course, and things like that. You have to, of course, conduct AML CTF awareness trainings for your staff members so that they know what they're meant to do in the different circumstances that may arise. And then, of course, you need to do transaction monitoring and just monitor your customers' transactions and making sure that you know what's going on. If you see suspicious patterns or suspicious matters, you need to, of course, record them and report on them. And finally, the regulatory reporting. And these, of course, include suspicious matters, includes IFTs, EFTs, and things like that. If you spot anything unusual, if there's any breaches, then of course all of these should be reported either internally or, to AUSTRAC. And then finally, all of these leads to the right-hand side of the slide, which is after all is said and done, you need to continuously assess and design the operational effectiveness of your AML CTF program. At the very least, you should be doing this once a year. Understanding, is it still fit for purpose? Has the company grown? Has its customer portfolio grown? Do I need to change anything in the AML CTF program? And then, of course, that brings you back to step one, and you keep this journey ongoing, really. Now, at the bottom of this diagram, you will see some governance and oversight, and generally who's responsible from that. Fundamentally, it's the AML CTF compliance officer, but of course, the overall responsibility lies with the board of directors or your governing body. And then there's record keeping, and program administration, which is fundamentally the responsibility of the AML CTF compliance officer. But of course, one person can't do it all, so they generally roll out the relevant responsibilities to the relevant teams in an organization. But for that, of course, you need adequate training and awareness programs in place. So that's fundamentally the journey. So we'll move on now to how certain obligations have actually been modified or added to by the Tranche 2 bill. Now, again, all of these are becoming, if most of this, sorry, are becoming effective as of 31st of March 2026. Some of these obligations are kicking in on the 1st of July 2026. But here in LegalVision, we're already advising our clients really, to start getting all of these in motion by the 31st of March. And we would recommend the same really for everyone. Now, the first category of changes that the Tranche 2 bill did is under the category of risk management. So firstly, there's a more comprehensive risk assessment now being mandated by AUSTRAC. So all reporting entities must conduct quite detailed risk assessments now to identify, assess, and mitigate and address all the money laundering and terrorism financing risks in the business. And what's new as well is that there is now no longer a need to separate, to have that separation between a Part A and Part B of your AML CTF program. So most of you would know Part A deals with your overall program and the risk portfolios, and then Part B deals with KYC. There's no longer a separation needed. That's not to say it's wrong to have a separation. You can still have them if it's fit for purpose, but you no longer need to have the separation. The other thing that came about with the Tranche 2 bill is a strengthening of AML CTF programs. So now organization will need quite robust policies, procedures, and systems in place in order to address their relevant ML and TF risks. But also what's new is that AML CTF programs must address what they are calling proliferation financing risks. So this is nuclear proliferation. While it seems quite far-fetched, AUSTRAC has had to deal with situations where money laundering and terrorism financing has gone off to Iran and Russia for proliferation purposes. So that's why they've now brought it under their ambit. So most AML CTF programs, at least all the ones I've seen thus far in my career, I've not seen proliferation risk being addressed. So this would mean most entities would need to revise their AML CTF programs anyway. And finally, a much welcome guidance on tipping off offenses. Nothing really new here, but guidance is always very much welcome and appreciated. So that's also made its way in. So under the second category of new things, on the right-hand side of the screen, you would see governance and accountability. So Tranche 2 bill has basically clarified that fundamentally accountability lies with the board and the senior management of an organization. That's always really been the case, but it's really been enshrined now. More certainty has been given for the AML CTF compliance officer, um, and they need to be given sufficient authority, independence, and resources now to ensure overall compliance with AML CTF laws. And finally, this one was quite a new concept, which is a group. Well, yes and no. There's a group-wide AML CTF arrangements. Previously, we had designated business groups, but now we have a group-wide AML CTF arrangement that allows for reporting entities within an overall corporate group to establish a group-wide arrangement. And then, of course, you will have a designated lead entity that will be responsible for oversight and coordination. And then the last big thing that the Tranche 2 bill did is to change a bit on the customer due diligence obligations. So they've now modified the CDD requirements to say that it only now needs to be proportionate to the risk profile of the customers, which is great to hear. So if it's low risk, you only need to do low CDD. If it's high risk, obviously you'll need to do a bit more. Beneficial ownership has also changed with a new focus on really the control element, who controls the customer, and of course, PEPs. I think there's been a bit of lackluster enforcement and voluntary obligations on PEPs, so that has received more focus. And finally, ongoing customer monitoring. So nothing new here particularly, but they've just emphasized that you really need to continuously monitor your customer relationships and their risk profile and their transactions that they're making. And that's essential. All right. So that's fundamentally the obligations. That brings us really to the tips for compliance. Now, this is where I guess the survey comes in. A lot have found, staying up to date with laws, a lot of which we've addressed, but a lot of it was KYC as well. Like, what are your KYC obligations? So the first one, and this is by far the most important takeaway you need to have, which is to develop a very, very robust AML CTF program. Your AML CTF program needs to have very clear policies and procedures in place to address the relevant ML and TF risk in your business. Again, AML CTF program is not a one size fits all. Every business should, they will have their own customer profiles, they will have their own transaction records, and the ML and TF risk will change from business to business. Your policies and procedures must relate to the relevant ML and TF risk in your business. You need to continuously be making risk assessments. You need to, provide for adequate staff training. You need to continuously monitor and report on any suspicious matters, IFTs, and things like that. And fundamentally, you need to make very practical policies and procedures. And you can do so by really working closely with your business and operational units within your organization. You remember I said earlier, you fundamentally need your legal requirements to match what's actually going to be pragmatic and practical for your business. So if anything, this is the big takeaway. And a lot of times we have clients asking us, what do I need to do? Fundamentally, go back to your AML CTF program. That's what you need to do. Comply with it, follow it. If you find that it's not actually telling you what to do, then that's actually indicative that your AML CTF program needs a revamp because it's not telling you something that's actually present in your business. So rightfully, it should be the be all and end all of what you should be doing. Now, of course, the next tip we recommend is, of course, staying up to date with regulatory changes. This is, of course, hard, but try to monitor AUSTRAC guidance quite closely. If you haven't bookmarked the AUSTRAC enforcement and guidance website, do so. Check in every now and then. And of course, attend industry events. That's always going to be quite helpful. Some people know this, some people don't. But for the next point, we can actually recommend leveraging technology. So in case you did not know, you can actually outsource certain AML CTF obligations. Obviously, remember, tipping off offense is still an offense. You can't outsource that bit, but you can outsource things like KYC. And you can engage third-party softwares or utilize or build your own AML CTF softwares to whether it's to monitor internally or to do your KYC for you. Just remember, of course, if you do engage third-party providers, make sure you do have an agreement in place, just so that if you ever need to, you could rely on the safe harbor defense saying, hey, I've actually relied on this third-party provider. And other tips, of course, is to conduct regular risk assessments. We mentioned this earlier. It's your AML CTF obligations are meant to be quite live and move from time to time. You also need to provide effective training and awareness to your staff members. I think this goes without saying. Robust record keeping is, first and foremost as well. Make sure you maintain accurate and up-to-date records. And this, of course, may tie in with leveraging technology. You might want to look at automating this, especially if your business is running at scale. And then fundamentally, your CDD and suspicious matter reportings. With CDD, I think we're getting a lot of questions about what is CDD, what's the level needed. It's really about identifying and knowing your customers specifically and what their risk profiles are for money laundering and terrorism financing. Once you understand their risk profiles, you can and should implement what's reasonable and proportionate in order to do customer due diligence, your CDD. And of course, monitor their activities from time to time and monitor them for any changes in risk in their risk profile as well. And finally, SMRs. I don't think any of us are new to this, but if you do identify any SMRs, you are meant to report them timely to AUSTRAC. So these are broadly your obligations and I guess our tips for helping you comply with them. All right. So that really concludes the main part of our webinar. You might find our publications useful. So we have on screen our General Counsel Toolkit and of course our Anti-Money Laundering fact sheet. You can just scan the QR code and that will lead you to these publishings. And don't worry, they'll come up again a bit later. You might also be interested in our next upcoming event, which is sponsoring foreign workers in your tech business. And this is scheduled for Thursday, 19th of December, 11 a.m. Sydney time. You can register with the link that's on the slide. All right. So now's the time, I guess, to put and submit any questions you may have. And while you are doing so, I'll just take a minute to tell you about LegalVision's desk extension. So LegalVision, we've spoken to hundreds of C-suite and in-house counsel lawyers. We understand really that an in-house counsel lawyer, they're being increasingly pulled in many different directions. They're being required to provide input on very critical and strategic matters, really at an executive level, but also while managing their very high volume of BAU matters. Now, of course, within a tight budget and a tight labor market, this can be quite difficult. So with LegalVision's desk extension, we can help you with all your business as usual legal needs. And this allows you, of course, to cost effectively increase the bench depth and capability of your team and to prioritize what's truly critical from a business perspective. And our desk extension lawyers invest upfront in understanding what your business is, what's important to your business, and then we work really sort of as an extension of your in-house legal function. And to learn more, I guess, about how our desk extension can help you, just feel free to provide your details when the survey appears at the end of this webinar. All right, so here's on the screen, you'll see the URLs and the QR codes for the publishings again, but now's when we will answer some of the questions that you've put through. All right, so, all right, I can see a couple of questions. The first one, please provide clarity about what processes to follow if you are unable to identify the beneficial owners. All right, so I think fundamentally, again, the takeaway here is to know that there is no hard and fast rule. What AML CTF procedures you need to follow will depend on the TF and the ML risks that are present in your business. And you need to take reasonable steps to mitigate those risks. So examples include if you are truly unable to identify a beneficial owner of a particular customer, Examples really include conducting EDD, enhanced due diligence on the customer. This can include obviously doing a thorough assessment of the risks that this customer actually presents, monitoring their transactions and monitor this customers very closely from here on out, and take steps accordingly if you find any suspicious matters and things like that. Of course, it could, after doing this EDD, you could also lead you to a path of making a decision, such as, rejecting the customer, saying, hey, you couldn't provide enough beneficial ownership data. Sorry, we can't onboard you. Or you can say, we'll onboard you, but because we can't identify your beneficial ownership, we're going to impose transaction limits, or we're going to have increased monitoring over you, things like that. So all of these are possible. Again, your fundamental duty is to take reasonable and proportionate steps to mitigate the relevant ML and TF risks. Yep. Okay. So there's another question that's come through, which is what types of triggers during transaction monitoring, more narrowly than suspicion activity, do financial services such as banks will look for to tip off to AUSTRAC on customer transactions account? Is tip-off the only action to take other than taking control of the customer's accounts? That is, if CDD is not complied with. All right, a few different questions there. Firstly, what type of triggers uh, would um, would you look to tell AUSTRAC? Now, really, your obligations to report to AUSTRAC, is of course your IFTs and then your suspicious matters. Now, the definition of suspicious matters, that's what really changes from here to there. It could include the size of transactions. It could include the destination of transfer and remittance instructions. It could include, who is giving the instructions. It could include so many different things. The purpose listed in the transfer instruction. So all of these fundamentally could trigger transaction monitoring and suspicious matter reporting. And your next question, which is tip-off the only action to take other than to take control of customers' accounts? These are all different things. Tipping off is an offense that you should never fall foul of. Fundamentally, you should never tip off, really. You should never make known that you are reporting something to AUSTRAC that could be a suspicious matter, whether it's to the customer itself or to a third party. That's different from taking control of the customer's account, which is a mitigation procedure that you might do in your business in order to prevent further money laundering and terrorism financing. So these are different things. And again, CDD is another completely different obligation, which is usually during the onboarding process, but also during ongoing transaction monitoring to see if their risk profile has changed and if you truly know who your customers are. So I hope that helps, but yeah, a few different questions there. All right. There's another question come through specifically on KYC. I'm sensing a pattern here about what AML checks are required for limited partnerships or ESV CLPs, limited partnerships, and the like. All right. There is no hard and fast rule to this. Again, it's all about risk profiles. You are expected to conduct sufficient KYC to address the relevant ML and TF risks in your business. Now, having said that, here's probably a good guideline of what you can potentially consider for limited partnerships, ESV CLPs, and the like. Obviously, the identity of the partnership itself. This includes its legal structure. Don't be afraid of even asking for a diagram if it's relatively complex. What's their registered office address, who their contact details are. Another one is, of course, who the general partners are or who are the controlling partners or the controlling officers in this entity, who can exercise significant influence or control. This, of course, would then bring you to a fundamental document, which is what is the partnership or the constituting document of that entity. Make sure to cite copies of that document and to make sure you do your cross checks as to who actually is the general partner or who has the controlling interest. Obviously, there's the identity of the beneficial owners. Understandably, in a lot of cases, especially in investment funds, it's hard or impossible sometimes to even identify fully all the beneficial owners, but do try to identify all of this. And of course, source of funds is a big one where you're dealing with customers with lots of funds. and wealth, you are expected to review and figure out where their source of funds is from. So yes. Okay, so there's another question, which is often when dealing with overseas customers, the entity structures do not fit neatly within the categories covered by Chapter 4 of the AML CTF rules. What processes do you follow then? Yeah, again, the processes, there are two things here. Firstly, your AML CTF program should be flexible enough to allow for the fact that they may not be someone that fits into the square that you've given them, but you need to have processes and procedures in place to then do the necessary KYC or transaction monitoring or EDD on that customer. And that, again, there's no hard and fast rule. It really is about drilling down to the fundamental concepts in your AML CTF obligation, which is number one, identity, number two, beneficial ownership, and number three, PEPs. These are the things that you want to really drill down to, regardless of what their structure is. You know, they could be a DAO, a decentralized autonomous organization that's, you know, constituted in Cayman Islands. It doesn't matter. You can still do KYC, and you still should do KYC. It's just that the shape of your KYC changes accordingly. Now, particularly in the world of crypto, this might be hard because of the whole everyone's a bit autonomous and anonymous in that sense. But you still need to do what's reasonable. So that might be including, you know, citing a copy of the DAO rules or looking at if there is a transaction record or the treasury record for the DAO, looking at that. So same with, you know, US entities and things like that. Yeah, it is quite a fluid obligation that you have. All right. Other questions is copies of documents and photos of documents. Will they suffice? No hard and fast rule again. This is, again, fundamentally your obligation is to be reasonably satisfied that you've taken proportionate steps to do your AML CTF obligation. So to be honest, I'd say yes. Photos of ID documents are fine. You know, Reese, I've been onboarded on some of the most secure and well-renowned investment portfolios, and what they do is they say, hold up your driving license and take a photo of that. So yes, I'd say those are quite reasonable. But of course, you know, if you see something that looks dodgy or photoshopped or things like that, you might want to dig a bit deeper. So again, no hard and fast rule. You need to be quite fluid with your obligations. Another question with AML CTF programs is how would these programs and legal requirements apply to external accounting firms and accounting consultants? Really no different to any others. Your fundamental duty, again, is to develop an AML CTF program and implement it, but one that works for your business. So where you're an accounting firm or you're an accounting consultant, you have to do the full exercise. Who are your customers? Where are they based? Where are the source of funds? What kind of services are you providing? What are the MLTF risks that come out from your, you know, uh, from your services, and therefore, you know, extrapolate. A good example is conveyancers. So where you are a, you know, suburban conveyancer, you know, really targeting the local populace and helping them do local conveyancing, that's much less risk of money laundering and terrorism financing to a conveyancer who's facilitating international investments with countries that, you know, especially if they involve investment funds from countries that, you know, like North Korea, Iran, Russia, all these sanctioned countries. So again, there's no hard and fast rule. We just need to be a bit more fluid. Another question is clear guidance. Should there be clear guidance or given to staff about what kind of behavior is or is not suspicious and therefore be reported? Look, ideally, yes, you give as much guidance as you can. That always will help people and your staff in particular. But look, is that possible? I'm just going to go out there and say, no, it's not, because you never know what you're going to bump into. It could be something that you have never seen before in 10 years of running your business, and that's suspicious or it's not suspicious. Fundamentally, it's about giving an overall training to your staff, and you know, part of your policy and training programs could be, here are the things that are definitely suspicious. So for example, this client, obviously lives in Australia and, uses this remittance platform to siphon money back to their family in Malaysia. And that's fine. You see routine transactions. And then suddenly it starts going to countries like Nigeria, Somalia, Colombia, Mexico. And then you have, what is this? This is all new. I've not received like instructions. Maybe it's legit, maybe it's not, but that's when you should do something about it. That might be suspicious matter reporting, or it might be contacting the client, depending, of course, on tipping off offenses and things like that. So yeah, it's hard to break it down exactly what is or is not, but obviously the more guidance you can give, the better. All right, there's also another question on basic data storage requirements for personal data. This is actually a good question because it's a reminder that your KYC data that you collect will actually be governed by the Privacy Act in Australia. So, and of course, if you are AFSL holder as well, you have additional cybersecurity obligations to protect these kinds of data. Um, so this is a good reminder that, AML CTF program is only one of many laws you might need to comply with, that you obviously need to implement sufficient, reasonable standards of security within your organization to protect these private information that you are collecting from your customers. Of course, this includes data breach notification, if this happens, limiting the purpose of why this data are being used and things like that. So yeah, that question is actually a good one to remind everyone about privacy, actually. All right. There's a question on disclosure certificates, whether they're a reasonable form of verification for different customers, because often customers are not willing to provide constituting documents. Look, the answer to this question is yes, but only as a last resort. Now, there's quite a lot of rules and guidance in place where you can rely on a disclosure certificate. This allowance is given firstly where you are really unable to get reliable and independent documentation to verify the identity of the relevant customer or the beneficial owners. So unable to, not unwilling to. Um, Secondly, is it required by your AML CTF program? So, that's another reason why your AML CTF program needs to be quite matching with your operational procedures. The third one is even if a disclosure certificate is relied upon, it needs to be given by an appropriate person within the organization that has sufficient control and authority to give out this disclosure certificate and knowledge of the contents of the disclosure certificate. So it can't just be some random employee. And also, of course, the disclosure certificate needs to actually contain the information that you are looking for from the relevant customer or their beneficial owners. So, of course, yeah, that I guess makes sense and goes without saying. And finally, even if you do rely on these disclosure certificates, like I said, your fundamental obligations is to do what's proportionate and reasonable to address the risk in your business. So if you are truly unable to get, constituting documents from your customers and you decide to rely on a disclosure certificate, you might put in place a policy that increases monitoring over the customer and their risk profile because you have not gotten their constituting documents. So yeah, that's all in all, it all works out to one big program, which is what AUSTRAC expects. It's not for you to follow a hard and fast rule, but really to do anything and everything possible that's reasonable to address your relevant risks. All right. A few more questions have been put forward, but unfortunately, that's all the time we have for today. I'm really sorry if we could not get to your questions. There's some good ones out there. But look, feel free to submit your details in the survey at the end of this webinar. If you would like any assistance with those questions that we didn't answer, and to, of course, learn more about our membership or desk extension. Now, while this is a free webinar, we do value your feedback. It really, really helps us in framing and setting up and planning for these kinds of events. So please complete the 30-second survey at the end. It will really, really be appreciated. But otherwise, thank you so much for joining us, and I wish all of you a great day ahead and a wonderful holiday season ahead. Bye, everyone.